believe we are live. It is Friday. I am in red. I'm not wearing one of our low VA rates t-shirts today, but I am wearing red. I always wear red on Friday, and we challenge you, those that are watching, if it is Friday, wear red. Why do we do that? Well, look at hashtag Red Friday anywhere on Facebook, Instagram, or Twitter, and you should see a lot of our posts and other posts from people that support the military. Red stands for remembering everyone deployed on Friday as an outward expression of our inward passion for the military. We wear red to let people know that we support you, friends and family of the military, and most importantly, those who are serving or who have served. So today the topic of our video is pros and cons of refinancing. Now, what you see here on the screen is kind of a general overview of all sorts of refinancing. VA, which is what we do here for veterans. FHA, we also do here. Conventional, we do that. We do all sorts of loans, but primarily for our low VA rates Facebook fans, which, by the way, we reached the huge number of 1 million fans this week. Thank you. Hopefully we've even gone higher than that because we reached 1 million either yesterday or the day before. But what we're going to do today is talk in general about the pros and cons of refinancing, and I will be specific about the pros and cons. So there are very few cons of refinancing a VA loan. So in general, why do people refinance? Well, number one, lower payment. Over the last couple of years, interest rates, though they go like this, the trend has been down. So interest rates have been going down. Federal Reserve has been keeping interest rates low. When you can take a rate from, let's say, the 4 or 5 range down to the 2 or 3 range, well, you're going to get lower payments via lower interest rates. Now, what are we talking about other options? People refinance even when their payments go up, or even when interest rates go up. Now, you may be asking yourself, why would they do that? Well, if you're going to do cash out, where you've got lots of student loans, credit cards, auto loans that you want to consolidate so that you're not paying American Express, then Visa, then MasterCard, then Navy Fed, you want to consolidate all that into one payment, you can do that through a cash out refinance. Maybe you want to do home improvements. Maybe you want a better air conditioner. Maybe you want solar panels. Maybe you want to put in a swimming pool. You want to pull cash out of the equity that you have in your home. That's another benefit or pro of refinancing. Now, let's talk about the cons. And by the way, all of those pros are applicable on VA loans. You can do cash out with VA. As a matter of fact, it's one of the best cash out programs out there because you can borrow up to 100% of what your home is worth. So let's just say you have a home that appraises for $300,000. You owe $250,000 on it, you can go get $50,000 of your equity in the form of cash and do whatever you want with it. The VA does not put restrictions on it as long as you're within 100% of the equity of your home. Most other programs that are not for veterans, non-VA loans, will not allow you to go and borrow 100% of what your home is worth. So that's an additional pro or benefit of a VA cash out refinance. Now, let's talk about some cons. There are fees when you refinance. If you do nothing to your mortgage, you're not going to incur any fees. If you go to refinance, there's title insurance. You may end up having to pay the VA funding fee again unless you're a disabled veteran, which we have talked about. You might have to go get an appraisal. These fees depend on your interest rate that you're trying to get, depend on if you have a VA, FHA, or conventional loan, and what state you're in. Get with us for details on what the fees involved in your refinance might be. Risk. There's not a whole lot of risk, in my opinion, in refinancing. The only risk would be, let's say back to that example of your home appraises for $300,000, you owe $250,000, and you decide to go pull out $50,000 worth of equity. So now you owe $300,000 on a home that you only owed $250,000 on beforehand. You get the benefits we talked about. The risk is, what happens if we have another recession and home prices plummet and your home is now not worth $300,000? Anytime you refinance and pull equity out of your house, you run the risk of perhaps losing equity. But it's not a huge risk, in my opinion. There's very few risks in refinancing. Now, one might say, what if I do an adjustable rate mortgage? Isn't there risk in that? Well, again, on non-VA loans, there are additional risks of having an adjustable rate mortgage, and there are some risks in refinancing into an adjustable rate loan with the VA. But if you've watched any of our videos about adjustable rate mortgages, the risks with a VA hybrid arm are much less, almost to the point where I don't even consider them risks. They're just variables that you should probably understand. And then finally, prepayment penalties. This is historical stuff that's not even that applicable these days. Very few loans, if any, have prepayment penalties. the government's all but outlawed them, for lack of better terms, made it very difficult for banks to give you a prepayment penalty. These are a thing of the past. They helped kind of create the housing collapse that we had because people were not even able to refinance when rates were going lower, or else they faced very large penalties. So if you have a prepayment penalty, give us a call, or if someone's telling you you can't refinance because there's a penalty, give us a call and let us analyze it and make sure it's just not some sort of odd scare tactic that your old mortgage company is trying to keep you on their books longer than they need to. Because very few, if anyone, should have a prepayment penalty today. So that's basically your pros and cons of refinancing. I always want to plug the most popular loan here at Low VA Rates today. That's the VA Interest Rate Refinance Reduction Loan, the IRRL, or the Streamline. Tons of pros. Lower rates, lower payments, fast closing, no appraisal, no employment verification needed. Basically, if you have a VA loan today, and your interest rate is anywhere above 2.5% to 2.75%, give us a call. There are programs out there that can lower your interest rate, lower your payment, all very quickly and easily. We don't even like to call it a process here, it's an experience. It's a very easy experience taking advantage of the VA interest rate reduction loan. So I always end with a pause in case someone is hesitant to ask questions. Feel free to type your questions in right now online. I'm going to ramble about one or two other things just in case someone's trying to hit submit. I can answer anything, whether it's about today's topic or something else that's lingering in your mind as it pertains to either our company or as it pertains to VA refinances. But if nothing else, look on Monday and next week for some fun pictures and videos of our staff dressed up in Halloween costumes. We always have fun here on Halloween on Mondays. Maybe we'll go live for just a few minutes on Monday. We've got about 250 employees here in our corporate office in Utah. All of them will have cubicles full of candy. We'll have kids coming in from around the town and from the employees' families, and it's going to be a fun time. So any questions from our Facebook community? Thank you for watching, and we'll talk to you next time.